Hello everybody. So today I'm going to talk about a trade that I found on the Micro E-mini NASDAQ, and this is October 22nd, 2025. So upon market open, which is right here, we were bearish on both the 1 hour and the 4 hour. So my bias was to find a short. And what happened when market opened was that we swept. This was a long trade. It wasn't as long. It took longer than I usually would like to find and enter a trade. I did not end up even finding the trade until about 11:15, which is like 15 minutes away from when I would just call it for the day. So we'll just talk through this. So market opens and London lows are swept upon market open, and then price pushes up just a little bit. We never push up to take out London or Asian session highs, which I found really interesting. So I was kind of like, that's weird. So then we had, we did have sweep this liquidity, okay, and then we came back up and we swept liquidity from here, and price starts going down. As you can see, we start forming things. Here we form a fair value gap, and price moves back up into it, nearly inverses it, but does end up respecting it and starting to move down. Now at this point in time, I am like, okay, so we respected this fair value gap, and we also, what was it? Was it equilibrium that I ran with? It might have been. Let's see. So price. Sorry, it sounds like my dog is like throwing up or something. What are you doing, Stu? Don't do that, buddy. That's weird. She's licking the cabinets. Okay, anyway. So price comes up into this fair value gap, this bearish fair value gap, respects it, also comes into equilibrium, starts moving out of equilibrium. Okay, so that is good. And now what I did was I waited for price to exit this area out of equilibrium and out of the fair value gap. So we had equilibrium, a fair value gap, and I think what I did was I went to the 1 minute time frame, which I think you can use sometimes, but not all the time. And we had broken structure back down to the downside on the 1 minute, so that was another confluence. As well as there were a couple fair value gaps. Where was it? Right here. That just kind of like, no, forget I just said that. So for the 1 minute, the only thing that I really took from that was that we broke structure to back to the downside from the upside. Okay, and that's not our trade. Oops, did I just show you the wrong trade? If I did, I'm sorry. So on the 1 minute, we broke structure back down to the downside, and so break of structure, equilibrium, fair value gap, all of these things combined made me think to go short. So I entered the trade right here on this candle, and I exited the trade on this candle. The trade did hit my take profit, and I put my take profit down here, right at the bottom of this thing. That's your take profit, because something was sitting over there. It was probably like, what was it? Here we go. There it is. Oh, it's so hard to see sometimes. Okay. Oh yeah. So all I did was put it at this right here. This prominent previous prominent low, and I would have been happy with that. So I'm glad that I did, because what ended up happening was we had some consolidating. You know, honestly, I would not have gotten taken out of the trade, but it would have been a freaking nightmare, because look how close that was. Like, look how close that was, dude, to going back to break even right here on this black candle right here. And then, yeah, we would have ended up eventually making like way more. But that's not the kind of attitude that you should have. You just want to have clean, clear trades. And this was a clean, clear, high probability, high confidence trade that I entered. And it did exactly what was anticipated. It had 3 confluences. Yeah, it had 3 confluences, and I was following my bias, and I just set my target to something that was likely and had high probability, and yeah, price did just that. So equilibrium, fair value gaps, break of structure, liquidity sweep, you know, it's basically what I used in this. And I'm gonna go.